Good evening, good evening, everybody. Hope you guys are doing great. Can you please confirm if you can hear me? Welcome everyone. Just make sure if you please confirm if you can hear me. Please confirm if you can see me before we begin with today's session. Please confirm if you can hear me. Please confirm if you can hear me. And if you can hear me, make sure that you comment in the comment section. As people are joining, please let me know where you are tuning in from. I see there's 23 people already in, so which is good. So 33 now. Let me know your name, where you are tuning in from, which city, which country you are tuning in from. Let me know. Let me know. We are happy to have you here today. Please make sure that you saw me all the way from Mexico, all the way from Mexico. Where in Mexico, my good sir? You saw me where in Mexico? We have Randall. Randall is a regular all the way from Cape Town. Great to see you again. Great to see you again. Yes, please just let me know where you're tuning in from. Let me know where you are tuning in from, which city, which country. Right. All the way from India, where in India we have Rafael from Nigeria, where in Nigeria, my good sir. Christopher from Nigeria, where in Nigeria. Are you in Lagos? Are you in Abuja? Are you in Enugu? I do apologize on that. I do apologize. We have Felix all the way from Nairobi, Kenya. All the way from Kenya. We have Frank all the way from Windhoek, all the way from Windhoek. I have brothers of mine that are in Windhoek that were in Windhoek this past weekend. We have Elizabeth all the way from Lagos, Nigeria. I am apologizing. I just need to. All the way from Enugu State, all the way from Enugu State. Lovely, lovely, lovely. All the way from India. Where in India? You're from Mombasa, where in India. Delta, all the way from Delta State. Great to see you guys. Great to see you guys. This is beautiful. This is beautiful. Again, welcome, guys. Welcome to yet another live trading session with myself, Isaac Izy. Caleb, all the way from Port Harcourt, Nigeria. All the way from Port Harcourt, Nigeria. Lovely. Great to meet you, Caleb. Great to meet you, Caleb. Great to meet you. I will be coming to Port Harcourt very soon. House of Treasures, Port Harcourt. I will be there very, very soon. So make sure that you come through. Make sure that you come through. Good evening, everybody. Good morning, good afternoon, good evening from wherever you are in this beautiful world. I welcome you to yet another live trading session with myself, Isaac Izy. This is our first live trading session in the month of September. Happy new month. Happy new month. I hope it's going to be a profitable month for you. I hope it's going to be a great month, a blessed month. It's the ninth month of the year, which means new things are getting born. Right, so it's a month of new beginnings. So I wish you guys all new beginnings. I wish you guys great profitability in this month. All right. Yes, man. I'm super excited. I hope you guys are excited. Hopefully we'll get to have some live trades today that we can take. If not, then I'll give you guys a few trades to look at and prices to look at where you can you know literally just start have a look at on those trades. So yes, we have Hamid all the way from Lagos. We have Confidence all the way from Pakistan. Yes, before we begin, may I just say that any opinion, any news research, any prices analysis, or any information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. And as I always say, if you look for any financial advice or investment advice, make sure that you speak to a regulated key individual that is regulated by the financial board or the financial regulatory board in the country that you are in. If you are in South Africa, make sure that you speak to a key individual that is regulated by the FSCA. Then they can give you the correct information and the correct advice. All right, what we are doing today is just general market commentary. We're not giving any financial advice, we're not giving out any investment advice. We just wanted to get that out of the way. Happy new month to you, Mr. VJ Vlogs. All right, and as usual, we have something exciting for you guys. As usual, you get 100% deposit bonus on your deposit, on your first time deposit, if you have attended this webinar. Isn't that amazing? After attending this lesson, I'm going to give you a promo code at the end of this lesson so you can get 100% deposit bonus so you can maximize your profit potential. All right, all right, all right, all right. And for those of you that are joining us for the first time today, my name is Isaac Izy. Let me just do an introduction so you can know who you are listening to. It's important that you know who is giving you information. We have Babnosi all the way from South Africa, or somewhere in South Africa are you from? Just to give you guys a little bit of an introduction of myself, my name is Isaac. I'm famously known as Isaac Izy. I'm a professional Forex trader with a decade of experience, and I'm a founder of an academy called Flexi Forex College, and we have trained over 5,000 students to date, and we have held over 300 Forex seminars throughout the Southern African region, and we are now targeting to go into West Africa and North Africa. So hopefully I'll be seeing you guys from people from Nigeria. I'll be seeing you very soon. And my passion, or our core passion, is to provide new traders with proven strategies and to empower them to succeed. That is our passion. All the way from, we have Amanda all the way from Pietermaritzburg, PMB, South Africa. Shout out. We have Fulfilled all the way from Nigeria. Where in Nigeria are you from? We have Hababuse all the way from Pretoria, Matlanyeni, Pitori, Matlanyeni. Shout out, guys. Guys, yes, that is basically in a nutshell who I am, and I will be your instructor for today. I'm gonna give you guys I presume most of the people that are here are beginners in forex trading. All right. I believe so. If you are an expert, please let us know. I believe people that are here are beginners, as well as people that haven't traded before and they're looking for that basic information of how to get an edge into the market, when to buy, when to sell, when to get out of a trade, what to look out for, signals, and all of that. I'm going to be discussing with you guys today. All right. We have Babnosi all the way from Bloemfontein. But before we begin with today's, we have Essay all the way from Nigeria. Where in Nigeria are you from? Let me know. And before we begin with today's from Abuja, we have Online Millionaire all the way from Abuja. I like your name. So yes, before we begin today, I thought it would be important. We have Kilebogile from Botswana. She's a beginner, or he's a beginner. You are welcome. Yes, I thought it would be very important, especially for the beginners, that I decode some of the myths that that are, how can I put it, some of the myths that have been sold in the forex industry in South Africa. All right, so let me dissect them a bit so you guys can at least know the truths and the false information that people sell you out there. Some of the myths that lure people into this industry, only to find out that it is not true. All right, so I'm going to decode just a few of them, all right? So I'm just going to take 5 today. There's a lot of them. There's a lot of myths out there, but I'm just going to take 5 today, and we're going to decode them, all right? Myth number one that is sold in the forex trading industry is that you can be profitable in X amount of time. And this is a question that I get from a lot of newbie traders asking me, Isaac, how long will it take me to be profitable? All right. The forex industry sometimes implies that you can become a profitable trader within a specific time frame, often with promises of quick riches. I've heard people saying you can become a millionaire in 3 months. You can become, you can make 1,000 rand. I mean, you can make a million rand from 1,000 rands within a month or so. Things like that, that they promise you there's you can become profitable in X amount of time. But the reality is that forex trading or success in forex trading is a journey and it's not a destination. While some traders may achieve profitability relatively quick, it is typically requires significant investment of time, effort, and continuous learning. The duration varies from person to person and depends on individual dedication and market conditions. So this is one of the myths that has been sold to you guys. You can be profitable in X amount of time. It is a myth. It is not a reality. All right. Number two, the work for automated solutions like trading robots and trading signals and all of these things that we see, account management, all of these things that are offered in this industry that take away the responsibility from you as the trader. These things are myths. There is no results without work. There is no results without work, period. All right. The reality is, while automated tools can assist you in trading, they are not a guarantee for success. Effective trading involves understanding market dynamics, risk management, and strategy adaptation. Relying on automation leads to losses as the market are influenced by ever changing factors. It's funny, today I was speaking to one of the veterans in trading that has been in trading for over 30 years, and they've developed robots for so many years, and they were telling me it gets to a point where these things don't work anymore. All right, so he was telling me the robot that he had used to do about 250% return per year, and all of a sudden it just stopped working, and the drawdowns were massively insane. So the myth is that you don't need to do any work. you know it's a myth, it's a lie. You have to put in some work. As much as we can rely on technology, we need to put in some work from our side. All right. Myth number three is that you can make a lot of money fast. You can make a lot of money fast. you know and it's a common thing. It's a common thing. Some forex promotions suggest that you can accumulate wealth very quick. That's what they are selling the lifestyle, selling the idea of making a lot of money very fast. All right. The reality is that forex trading is not a get rich quick scheme. All right. It carries a risk. All right. And those who rush into trading without a solid understanding, they often lose all their capital. All right. Building wealth through trading takes time, practice, and discipline. It takes time. Anything worth having takes time. The quicker you make it, the quicker you will lose it. That's just the truth. That's the truth. Anything worth having takes time. So the myth is that you can make a lot of money fast, but that is not entirely true. It is possible, but understand that to build wealth takes time. All right. It really does take time. Myth number four is that you can get rich with little to no money. That's a myth. You can get rich with little to no money. The idea that you can start forex trading with minimal capital and quickly get rich is a myth. Is a myth, all right? Now, the reality is that while it is possible to start trading with a small account, it's essential to recognize that the size of your initial capital significantly affects your risk and your potential for profit. Trading with very little capital can be high risk, and it leads often to losses. All right. Although it is possible to trade with a small account, however, it is high risk because, for instance, if you're making 10% of $100, it's only $10. It doesn't make any difference in your life. However, the promise that you can get rich, or you can get massive returns from $100 account, it puts you in a place where you have to risk higher, and then the more you risk, the more you increase the chances of losing your money. So as much as you can trade with small money, understand that if you really want to be rich, it takes money to make money. Are we together? I hope you guys are with me. And myth number 5, which is what a lot of forex gurus are always selling, they say, I have a holy grail strategy that no one else knows about. You often hear them, I trade like a bank. This is the only forex strategy you'll ever need. I'm the only one who knows this, and then I want to sell it to you. Yeah, right. Guys, it's just simply not true. Just simply not true. If they were the only one that knew it, they wouldn't want to sell it to you anyway. All right. So understand that there is no really holy grail. There are different ways of trading forex. They always say there are many ways to kill a cat. Even with trading, there are many concepts. There are many, we have the smart money concept, we have the ICT, we have price action, we have support and resistance, we have trend line strategies, we have RB numbers. There's so many things, but all of them can all lead you to profitability depending on how you use them, right? Successful trading strategies are built on sound principles. All right, forex markets are highly competitive, and what works today may not work tomorrow due to changing market conditions. Relying on someone else's strategy without understanding its core foundation will lead you to crazy losses. So I just said today I should just discuss these myths with you, especially the beginners, so you can know that you don't fall trap to this type of myths. All right, if you guys understand this or you've had any of them, can I see some fire emojis in the comment section? Can I please see some fire emojis in the comment section if you've ever been told about this, or this is some of the things that you've believed before you even got into trading, or you've had people say such things that I have the holy grail that no one knows about, and all of that cap that people like selling to people. Please let me know in the comment section. Please let me know in the comment section. Give me some fire emojis. Give me some dollar emojis so I can know we are together. Let me know. Before we get to it. So today, I'm just going to be discussing some foundational concepts of forex trading, some foundational concept, especially when it comes to technical analysis. We're going to be discussing some foundational information. So you guys, these are basically the building blocks of what really market structure is, forex trading is. Today we're going to be talking about candlestick with support and resistance in the form of RB numbers, round numbers. If you've joined any of our sessions before, then you would know what round numbers are. All right, if it's your first time, please make sure that you go view our previous sessions. They are on the OctaFX YouTube channel. And also, if you haven't subscribed, please make sure that you subscribe to the OctaFX YouTube channel. Click the notification bell that you are notified whenever we go. Whether you are a swing trader, whether you are a scalper, you're an intraday trader, you will see this chat pattern, and a lot of people ignore it, and it has a lot of potential to give you profitable trades. All right, and then we're going to discuss trend channels, and we're going to discuss risk management tips. A lot of people have been asking me, Isaac, please give us risk management tips. Today I decided, let me give you a few tips that you can follow, to make sure that your risk management is on point. Are we together? If you're together, give me some dollar emojis. Give me some dollar emojis. Give me some dollar emojis. You're about to make some money. 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 All right. So first things first, I said we're going to discuss candlesticks with support and resistance. Remember, candlesticks are useless on their own. All right. And you must always consider the market environment and what the price is telling you. All right. As with any technical indicator or tool, if candlestick points to a reversal or continuation, that does not mean it will happen. All right. We are in a game, or rather in a business of speculation. All right. The simplest ways to use candlesticks is with support and resistance levels. In the context of what we are discussing round numbers as our support and resistance, and we'll get to it when we get to the charts. All right. The reason for that is because support and resistance levels determine areas where buyers and sellers have set up their defenses. Looking at how candlesticks react to them will help you greatly in predicting where the price will go next. Are we together? Are we together? I hope you guys are with me. Oh yeah. I'm gonna open a chart shortly so I can show you how to plot the support and resistance using round numbers, and how we're going to use charts, candlestick patterns with support and resistance, or with round numbers. All right. Now let's take a look at this example, for instance. All right. Let's take a look at this example, for instance. All right. So as we can see, we have a resistance area at the, let me just, sorry, I do apologize for that. We have a resistance, or the market going to a resistance at the 1.4900 price. All right. As you guys can see that, we see a bullish candlestick right next to our resistance level. It looks so powerful, right? Looks like the market is going to break that resistance and continue going up. So you badly want to enter a trade and go into into a buying trade. However, if we look at what happens next, we have an inside down formation, a 3 inside down formation. All right. Do you guys see that? If you attended, I think it's the last session or the one before that, we did discuss this type of candlestick patterns. Just look at that. What happened at the resistance area? The market gave us a 3 inside down formation, just to confirm that we are about to sell. Do you see that? Do you see that? And if you are a smart trader, what you will do is you will take your sell positions there, and you will put your stop loss just above your resistance area, just in case the market goes against you. But that is an indication, it's an example of using support and resistance with candlestick patterns. All right, are we together? Yes. So I'm going to show you guys why it's important to use support and resistance with candlestick, and not just candlesticks alone. All right. Not just candlesticks alone. All right. So as we can see there, voila, what happened? The market dropped all the way down, and you are in crazy profits. You're probably going to the dealership, or you're going to buy that private jet that you've always been looking for. All right, all right, all right. So this is the reason why you should use candlestick patterns with support and resistance, or key levels, all right, not just candlesticks alone. As you can see here, for instance, in this example, the very same chart that we were looking at, look at this. That was a hammer. If you're using the candlestick alone, you were going to buy. And what happened? The market dropped. Look at that. We have an evening star over there. Alone, without support and resistance. What happened? You sold. What happened? The market kicked you out again. Look at that. We have a doji. What did you do? You bought. What did the market do? It kicked you out. For 3 times, you would have lost. But if you have waited for the market to get to a support area or a resistance area, you'll be eating nicely all the way from there, going all the way down. You see why now it's important for you to trade support and resistance, or key levels with candlesticks. Does it make sense? Does it make sense? Does it make sense? Please let me know. Please let me know. Please let me know if it makes sense before we move forward. If it makes sense to you. Again, like I said, if you haven't had or you have no idea what we're talking about when we're talking about support and resistance or round numbers, you have no idea what we're talking about when we're talking about candlestick patterns, please make sure you refer to my other previous sessions that we've had before. I've discussed all of this in more detail. Today, I'm just giving you an overview of just combining these things together, all right? I've discussed all of these candlesticks. I've discussed hammers. I've discussed evening stars. I've discussed dojis. I've discussed support and resistance. I've discussed round numbers on how to use them. Now we're just saying we're putting them together and why it's important to put them together as a confluence and you're not just using one of them without the other. All right. The more confirmations you get, the better trading decisions you will make. All right. So now we were discussing using candlesticks with round numbers. As we can see, that's our round number, our 00. That's 1.4900 in conjunction with the 3 inside candlestick pattern, 3 inside down candlestick pattern. Voila, the market dropped all the way. But if we're using just a candlestick patterns alone without the confluence of or let me not use the word confluence, in partnership with round numbers or with support and resistance, then you see that you will make silly mistakes. But if you put them together, you get a more solid signal. Are we together? Now let us move on to rectangle chart patterns. Rectangle chart patterns. All right, let's move on to rectangle chart patterns. A rectangle chart pattern is formed when the price is bounded by the parallel support and resistance levels. Again, we're talking support and resistance. It's back, all right? A rectangle exhibits a period of consolidation or an indecision in the market between buyers and sellers. This is where the market is just moving sideways. It's not going up, it's not going down, it's just moving sideways. There is an indecision between the buyers and the sellers, all right? Most of the time, this rectangle works as a continuation pattern, all right? The price will test the support and resistance level several times before eventually breaking out, all right? From there, the price could trend in the direction of the trend out. The direction of the breakout, whether it is to the upside or to the downside. It literally just market moving sideways, consolidating. As I said, a lot of people look down on this, and this is one of the most common and the most simplest trading signals that you can literally take in the market. All right, most of the time it's usually a continuation. It's not always a continuation, but most of the time it is a continuation pattern where the market will be trending down, and then for instance, this is what you're looking at. The market will be moving between the support and resistance, and if it breaks on the upside, the market will go up. If it breaks on the downside, the market will continue going down. So now let's have a look at a bearish rectangle. We are in a downtrend, and then, as I said, we are stuck now in a box, in a rectangle. And then what happens? The market breaks out of the rectangle. Literally, it is a rectangle. You see that? The market breaks out of the rectangle, and then boom, voila, the market starts falling to the direction of the breakout. You see how easy that is, and we're gonna go to the charts, and then I'm gonna show you. Actually, let's just quickly go to the charts. Let's see if there we go. Can you please confirm if you guys can see the charts? I just want to see if I can see. Let's go to GBP USD. All right, let's go to GBP USD. All right, just from right here, I'm going to insert a triangle. Just look at that there. All right, there's just been a period of consolidation over here. You see the market has been moving in the same between these two prices. We had a bit of a, let me just maybe go on a higher time frame so it can make a bit of sense. So the market has just been moving sideways, consolidating over here. We had a fake out there, and the market came back, and then eventually it broke out. And then what happened? The market dropped. Now we see a retest of that. The market dropped again. All right, let's see if we can find another one. Proper consolidation. All right, we have another one here. This one was a reversal over here. Market has just been moving between support and resistance, broke out to the downside, and then we had a selling opportunity. You guys see that? You guys see that? Let's try maybe Euro USD and see if we can find a triangle there as well. I mean a rectangle, not a triangle. There are rectangles as well, which I believe when we get a chance we will have a look at them. Look at that. Market broke out to the downside, market fell. It was consolidating. You see how easy it is. See how easy it is. Right here, the market has been, we were going up, the market was consolidating, we broke out to the upside and we went all the way up. Same thing here. You guys see how easy it is to spot this thing. Market was consolidating, we broke out, market broke out on the downside. Wherever, like I said, whichever the direction the market breaks out, that's the trade that we take. And everybody, people, not everybody per se, but people, a lot of people neglect this easy signal that you can get from the market. You guys see it? You guys see how simple it is to spot this? And you just wait for a breakout. Whatever direction the breakout is outside of that trend, you take that trade to that direction. Look at that. Market broke to the upside, went all the way up. So whenever you see a consolidation like that, here's another one there. You just wait for the market to break outside of that, and then boom, break out of that, and then we fall. Do you guys see that? Do you guys see that? If you can see, can I see some fire emojis? Can I see some dollar emojis? Make sure that you understand and you are with me. You are with me. All right. A similar thing, we have a bullish rectangle. The market is in an uptrend. You have a consolidation. The market breaks out of that consolidation and the market shoots up. And it's as simple as that. Look at that. The market has been going up like I was just showing you on the chart right now. Once the market breaks out of that, what happens? The market shoots all the way up. You see, this is one of the best or simplest trading signals that you can find on the charts. It's not complicated at all. There are not so many rules, and it's easy to see with the naked eye. You just look for a consolidation. You draw your triangle between support and resistance. If the market breaks out of that, you take a trade in the direction of that trend and you put your stop loss below. If you're taking a bullish trade, if you're taking an upward trade, you put your stop loss below the support, and if you're taking a selling trade, you put your stop loss above the resistance area. It's as simple as that. Don't ignore. I know, I always say simplicity is the ultimate sophistication in trading. Keep things simple. Keep things simple. All right, now let us move to trend channels, and then I'm going to show you guys how to identify them. And then once we're done with that, we're going to go to the charts. Look, I see someone saying we must look at gold. Farhan, we will have a look at gold and we see if we can find some opportunities there using these concepts that we just discussed today. So trend channels, basically guys, it's another form of support and resistance, but in a trend. All right, they use a word, is it diog, I'm not very good with pronouncing big words like diagonally, yeah, something like that, you'll forgive me. You'll forgive me. I really struggle pronouncing some words, but diagonally, something like that. You'll forgive me, man. You'll forgive me. But you understand what I'm saying. You understand what I'm saying. If you know how a trend moves, then you'll understand. We'll get to it. We'll get to it. Let me show you, all right? They say a picture is worth more than 1,000 words. So let me not speak too much and just show you. You see? My deposit was not okay. Please contact OctaFX support and they will assist you in that regard. We do apologize for any inconveniences. Please make sure that you contact support, and then you can go on the website and go to the live chat, and then they will assist you immediately. On the OctaFX website, if you look at, I think it's the bottom right corner, or at the top right corner, you will see a chat option. Chat, you can do a live chat, and then they will assist you with any issues. We do apologize for any inconveniences. All right, moving on. Trend channels are just another tool in technical analysis that can be used to determine good places to buy or sell. The upper, the upper trend line marks the resistance and the lower trend line marks the support. So both the tops and the bottoms of the channel represent potential areas of support and resistance. Again, you can refer back to some of the sessions that we did. I did teach you guys on how to draw trend lines, the significance of trend lines, and how you can use them to add to your confluence of trading. So go have a look at that. And then now we're not just using a trend line, but we're using two parallel trend lines to create a channel. We're basically trapping the market in a channel so we can get more opportunities to buy. Now if you combine this with RB numbers and candlestick patterns, you see you now have so many confirmations for you to start trading. So the upper trend, as I said, the upper trend line is your resistance, the lower trend line is your support. All right, trend channels with a negative slope or down are considered bearish, and those with a positive slope up, they are considered bullish. All right, now we're going to have a look at an example. As you can see over here, the market has been going up. We have two trend lines trapping the market there. Inside those two trend lines, we call this an uptrend channel, or an up channel. And then if the market is going down, we call that a down channel. And obviously we have the sideways channel, which is the rectangle that I told you about. And whenever there is a breakout or a touch on these trend lines, you can take a position. Like for instance, if we are going up like that, we are in an uptrend, and we come and touch this trend line again, this is a signal for a buy. Now if you use support and resistance there as well, and this is on your horizontal support and resistance, you get a nice signal, and then you can buy, and you know when to get out when the market gets to the if you're a day trader or intraday trader or a scalper. When the market gets to the resistance trend line, then you can jump out, wait for it to come to the support trend line, jump in again. Similarly, even if you're in a down channel, if the market gets to that point, you can just easily sell. When it comes here, you jump out, you wait for it to come there again, and then you sell, and then you can jump out. All right, similarly in a sideways trend, if you want to, is there any way I can get the document you are using when you are done? Yes, I believe this will be emailed to you as soon as we are done with all the live trading sessions. They can be emailed to you. All right, I believe so. I believe this will be emailed to you. All right, to everybody that's if you have registered on the link. If you have registered on the link for the specific live trading session, you should be able to get. As I was saying, in the sideways trend as well, support and resistance. The market gets here, you buy. The market gets there, you sell. All right, but with this one, as I said, it's a rectangle. I prefer that you just wait for it to break out, whether to the upside or to the downside, and then you can take your trades. All right, as I said before, before we get to risk management tips, let us quickly go to the charts. And let's see, was it Farad who asked us to look at gold? Let's see if we can identify some of the things that we spoke about today. We are on gold. Let us now plot our support and resistance using our round numbers. So now here we are at 1883.90. Let's do 1884, right? 0.00. All right, that's our support. And then let's see over here, we have 1986. Now let's do 1990.00. It puts us there. All right, lovely. I love it when I just put in these numbers and then we, let's look over there. We have 1944. Let's use 1950. 1950.00. Look at that. How beautiful is that, man? How beautiful. Man, this is awesome, man. You see that? Oh, man, this is beautiful. This is beautiful. Using this 1922, let's go to 1920. Using our double zeros, 1920. All right. And then let's go all the way up there. Let's check over there. This 2023. Let's do 2020. 2020. Look at that. Look at how nicely it sits there. And then we're gonna go to 20. Let's see, 2050. We're not talking about the years, right? We're talking about price. Look at how beautiful that is. Look at how beautiful that is. All right. Firstly, we discussed what? We discussed using support and resistance with candlesticks. Now let's look at here. You said we must look at gold. Now we're gonna zoom in and see what type of a candlestick pattern we got there that gave us an edge before the market went down. Look at how that beautiful engulfing over there. Isn't that amazing, guys? Isn't that amazing? Look at that engulfing. If you don't know what an engulfing is, I did discuss it. Please make sure that you tune in or go and see the other sessions that we've done when we're discussing candlestick patterns. As I told you, look at that engulfing right at the price of 2050. If you know the RB numbers, if you ever attended any of my session, you know what we would have done here. We would have got a nice sniper entry over there. And what did the market do? Go all the way down. Now this is using support and resistance with your candlestick patterns. Candlestick patterns. All right. You guys make sense? Does it make, do you guys understand? Does it make sense? Does it make sense over there? Does it make sense? Does it make sense? Please make sure. Please tell me if it makes sense. Please tell me if it makes sense. If it makes sense, give me some dollar emojis. Give me some fire emojis. All right. Please make sure. Please let me know that you understand. Please let me know that you do understand. All right. Let me know that you do understand. Here's another engulfing then right at our support and resistance area. Right. So now we're gonna look at current market, right? This is where the current market is. We actually do have, this is what I wanted us to discuss. I just showed you guys how to use candlestick with support and resistance. Raphael says it does make sense. Randall says it makes sense. We now have a triangle over there, a rectangle over there. Now, what are we waiting for? We're waiting for a breakout to the downside or a breakout to the upside. We are in an uptrend, so if we do get a breakout and you see it's next to our resistance area, so if the market does break out of this price and breaks out of that price, we know we are continuing to go up. So I would say if you're looking at gold, let's look at buy positions after a breakout of this this rectangle over there, right? We can come and retest the price over there, and then we shoot all the way up. Right? The market breaks to the downside. I would say here's another I'm sure if you go on a smaller time frame, you will see that it is The triangle, let me just, not a triangle. Why do I keep saying triangle? Rectangle, 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 rectangle. All right. See the one that I just highlighted. Let's go on a 1 hour time frame, and then you will see the market has been playing around there, eventually broke out, and then it shot all the way up. And we are seeing a similar thing over here where the market is playing inside these two prices, and then it will eventually shoot all the way up. All right. And here's another example of a rectangle. Right, here's another example of a rectangle where the market broke out, eventually shooting all the way up. Right, does it make sense? We understand support and resistance with candlestick patterns. We understand rectangles. You see how easy it is. As soon as we break out of that, either to the downside or to the upside, we know we're taking the direction of the breakout. All right, if the market breaks out of that rectangle, I almost said triangle again, rectangle. All right, all right. Does it make sense? Does it make sense? So now on gold, we are anticipating a bullish movement. The market just needs to break out of that consolidation, break that price over there, the RB number, which is our resistance area, and then we can shoot all the way up. All right. So I would say our next, if we're breaking out of that price, let's see where we are now. 1930. Let me go to 1930. 1930 is over there. Let's go to 1940. 1940. If you want to take a high risk trade, all right, I would say you can take it from the 1940. When the market starts playing around the 1940, you can take that, or you can wait for a retest on the 1930, shoot all the way up. I don't see it coming here, but if it does come, you can catch a sniper entry over there, and then we shoot all the way up. But what I see now is the market breaking out of this triangle, rectangle, breaking that price over there and shooting all the way up. Right. All right, all right, all right. Does it make sense? Does it make sense? Are you guys happy? Are you guys happy? We just looked at that. So now I'm going to show you try rectangle trend channels. Now we're going to draw our trend line from there. All right, all the way to that there. Remember I said they need to be parallel. All right, so we're looking with a parallel. All right, and the market to do something like that there. Right, so you see now the market is between these two prices. That's your resistance, that's your support. If you are selling, this is where you'll be taking your sells. All right, now let's look at what's priced over there. Now we're looking at 1970, which is again, hey, this is beautiful, this is awesome. 1970.00, this is a confluence. All right, that would have been a nice sell on gold over there if you're using all the candlesticks, if you're using the trend channels, and if you're using the RB numbers, which is our support and resistance. Now let's look at what candlestick pattern you got over there. All right, so now you had an evening star over there, and what did the market do? Drop. Let's go on a higher time frame. Let's see. Look at that, another candlestick reversal pattern. And what did the market do? Drop all the way. When it hits that price there, if you are a day trader, you can jump out, wait for it to come up again. See, go all the way down with it. You have a rejection there, go all the way down with it. All right, does it make sense, guys? Does it make sense? Let's look at an uptrend channel. Let's look at an uptrend channel. I'm gonna go back to H1. Guys, if it makes sense, can I please get some fire emojis? Can I please get some fire emojis? Fire emojis, fire emojis, fire emojis, dollar emojis. I'm gonna use that trend over there. Actually, let me use this one there. Let's see if we can get a nice channel over there. No, this one will give us a nice channel. But again, if you do understand trend lines, what time frame am I using? This is on a 1 hour time frame. This is on a 1 hour time frame. If you do understand trend lines, look at that. We did discuss it. The market broke to the downside, retested it, and it shot all the way down. You see so many confirmations all at one place. If you are using the support and resistance with candlestick, you would have entered there. If you're using what you call, if you're using trend lines alone, you would have waited for this breakout to come there. Like I said, there are many ways to kill a cat. You would have entered your trade over there, used it with confluence with the 1950 price. All right, you see, there are so many, and again with candlestick, there are so many ways to kill a cat. There are so many ways to kill a cat. But let's see if we can find an uptrend or an up channel over here. Remember, I said they just need to be parallel. This is nice, especially for day traders. This is nice for day traders. Yes, over there we are in an uptrend. You see, this is a support. So whenever price gets to this price, you know that you are buying. All right, and price gets to that price, you jump out. Price gets to that price, you jump out. All right. Here's another rectangle over there. You have a rectangle over there. The market broke out, tested it, shot all the way down. Do you guys have any questions? As I said, if you are looking for gold, I'm anticipating a buy on gold. All right, so let's look at those prices that I've discussed. I can either wait for the break of the 1950 price, and then we go all the way up. If the market fails to break that, we're obviously going to break the 1930 price, retest that, and go all the way down. But I am anticipating buying positions now. Let's see if I can do a trend channel over here. Right. See? So now the market could potentially come to this price. Oops, let me not do that. Price could come. Remember I said the 1930, and we could have a move to the upside, the break of that price over there. Right, this is nicer with trading view. I just don't know why I'm so stubborn with using MT4 when there is trading view, but I'm just that stubborn. I'm old school, guys. Right, this is what potentially could happen. Right, using the trend channel. Can I get some fire emojis? Can I get some dollar emojis? All right. All right, all right. You guys have any questions? Do you guys have any questions regarding that before we go to the risk management tips? I'm going to give you guys 4 risk management tips that you can use. We are running out of time. We literally have only 2 minutes left. All right. Please give me some fire emojis. My name is Easy, right? And I try to make simple Forex trading easy. It's too easy. So I try to make it as easy as possible for you guys to understand, so I don't use too many jargons, I don't use too many complicated methods. So it's simple for you guys. It's literally as simple as ABC. I want you guys to be able to understand and grasp this concepts. All right, everything that we've discussed today, all good. Taught you guys about using support and resistance with candlestick patterns, of which I showed you an example. We talked about using rectangles. I showed you an example. we talked about trend channels, and I showed you examples. Now you can combine all these three also together with everything that we have discussed before in the previous channels. Make sure that you are, make sure that you use everything that we have discussed. You can use the ones that are easier for you to understand, and then make your trading decisions based on that. All of these things that we've discussed, they all work. You can use them confluently together, or you can choose what you want, what works for you, depending on the currency pair that you are using. All right. If I want to draw a trend line, is it on the wick or on the body? You can decide. You can either draw it on the wick, or you can draw it on the body of the candlesticks. What matters is that you draw it correctly and you don't force it. Why we draw it on the wicks, it's less risky. On the body, it's a bit more high risk, but on the wicks, it's just less risky. That is the main reason why other people draw on the body and others draw on the wicks, right? But either way, the main thing is just to be able to capture the trend itself. And remember, if it's a breakout, it's not a wick, it has to be a body, a full body. All right, and you get a confirmation by the following candlestick, closing below that the trend line, all right, or above the trend line, depending whether you are in an uptrend or you are in a downtrend. All right, great. Now let's move on. Time is 8 o'clock. I really appreciate you guys spending an hour with me, man. It only feels like it's been 10 minutes, right? Time flies when you're having fun. But anyway, risk management tips. All right, risk management tips. If you take these things, download them in your mind, let them stay there, and you never forget them. All right, they will help you in your trading journey. All right, number one tip: the question should not be how much I will profit on this trade. The true question is, will I be fine if I don't profit from this trade? Now, this question will help you to always use proper risk. If whenever you are taking a trade and you are not fine, if you lose that trade, then it means your risk is higher. So whenever you take a trade, you want to make sure that the answer to this question is yes. Will I be fine if I lose this trade? Or will all my money be gone? If the answer is no, then you shouldn't be taking that trade. It means your risk is too high. But if the answer is yes, then you have passed risk management test. Will I be fine if I don't profit from this trade? If the answer is yes, go ahead. I give you a thumbs up. Take that trade. Number two, technical analysis skills can make you profits, but only risk management skills can keep those profits. You see everything I've taught you in the last hour. They can help you to make profit. But there is another step: keeping the profit. Now, how do you keep the profit? Risk management. I know a lot of traders, and I'm sure some of you are here. You had a nice profitable day and you blew all your money with one trade. If you are here, say that's me, and say I am guilty and I repent and I'll never do it again. Say that it's me, I repent and I'll never do it again. Say it's me, I repent and I'll never do it again. All right. They make money, a good day of trading, and they blow their account with only just one trade because of what? Lack of risk management. Now, risk management skills is the skill that can help you to keep your profits. Right. Number three, good trading is not the absence of losses. Good trading is the ability to keep them under control. Now, a lot of people lose hearts. I did it once and I repent. Say I'll never do it again. Your statement is not complete. Say, I'll never do it again. All right. Now, a lot of traders lose heart if they have a loss. All right. If they have a loss. Now, understand, all traders have losses. I have losses. Professional trader, I have losses. But it is the ability to control your losses that makes you a long term, a consistent, profitable trader. Now, good trading is not the absence of losses. Understand, even if you do have losses, it's not the end of the day. You just need to be able to keep your losses under control. You cut your losses short, all right, so you have a chance to have another trade, all right. Now, this is my favorite tip. Making a million without risk management means it's only a matter of time before the market takes it all back. Now, you can make profits, right? But if you don't have risk management, it's only a matter of time before you take it back to the market. But with the same principle, making a million with proper risk management rules means it's only a matter of time before you make much more. You see? You see the importance of risk management. You can do the same thing. This person has risk management rules, this one doesn't. They take the same trades. The one that doesn't have risk management rules stands a higher chance of taking the money back. But this one with risk management tools, they stand a higher chance of making much more. You see, it's that simple, man. It's that simple. Well, not that simple, but you get what I'm trying to say, right? You get what I'm trying to say. So yes, guys, that's it from me. Number one, the question should not be how much I will profit from this trade. The true question is always, will I be fine if I don't profit from this trade? Number two is technical analysis skills can make you profit, but only risk management can keep those profits. Good trading is not the absence of losses. Good trading is the ability to keep them under control. And lastly, making a million without risk management means it's only a matter of time before the market takes it all back. In the same breath, making a million with proper risk management rules means it's only a matter of time before you make much more. All right, guys, that's it from me, man. Really appreciate it. Really appreciate it. As I said, I'm going to give you a trading bonus, 100% trading bonus promo code. And the promo code is Isaac EDU. Isaac Edu, that's the promo code for you, my beautiful viewers, to have 100% trading bonus on your first time deposit. Make sure that you use that promo code whenever you are depositing so you can double up your deposit. If you're depositing a $5,000, you get another 5,000, so you now have a $10,000 margin. All right, so that's it from me, guys. Do you guys have any questions? Do you guys have any questions before we close? Do you guys have any questions before we close today's session? I had an awesome time with you guys. I hope you guys had an awesome time too. Right, you guys have any questions? Do you understand everything that we discussed today? By the way, we do have another live trading sessions that is happening on the 18th of September, 7 p.m. Central African time. Make sure that you don't miss out on that one. I am going to give you more gems. I'm going to give you more simplified strategies. I'm going to give you more foundational concepts of trading, and as time goes by we'll get into the more advanced. We're going to get into the supply and demand, we're going to get into the order blocks, we're going to get into liquidity, we're going to get into all of those sessions for you guys to be able to get a broader understanding of what makes the market move the way that it does, and things like that. So yeah, man, I'm good. Thanks for a good session. Thank you, Randall. Thank you for tuning in. Thank you, everybody, for tuning in. I really appreciate you guys spending time with me. I really appreciate. I love doing this. I love spending time with people, teaching them, imparting knowledge. Some of the things I'm teaching you is things that I've personally learned 10 years ago. 10 years ago, and to be able to impart the same knowledge to you guys right now, it's really, it takes me back as well to when I was a beginner, in the same position that you are in. And you can also look at me, someday you're going to be in the same position that I am in, and you are a profitable trader. All right, now Yeah, without wasting any more time, I would say let's see each other on the 18th of September 2023, the last quarter of the year. May this quarter be the best quarter of the year. May you finish with the bang. Make sure that everything that you've planned from January comes to life in this last quarter. You can still make it happen. You can still, even if you feel like you're delayed or you're running out of time, I'm here to tell you and encourage you that you're not running out of time. There's still enough time. You can still make a turnaround. You can still achieve those goals. You can still smash those goals. You can still finish the year. Um, Someone is asking what's the promo code. There's the promo code there. You can still finish the year with a bang, man. You can still finish the year with a bang, and I am rooting for you. If you think people are not supporting you, I'm rooting for you. I'm supporting you. I believe in you. I believe in your dreams, and I believe you can make it. I believe you can become the best trader your country has ever seen. That's why I believe in you. I believe. So don't disappoint me, right? Don't disappoint me. Make sure that you go out there and keep crushing those goals. Make sure that you go out there and keep smashing those goals. Keep breaking those levels. Keep breaking those limitations. Make sure that you become a winner. You wake up every single day with the winning mentality. Guys, that's it from me, Isaac Easy. Cheers. I am out. I love you guys so much. Hope you guys have a beautiful day and God bless you. Remember, Jesus loves you.